Hi guys, we've opened the floor up a little bit early today, so we can let everyone in yeah, so we can get this going on time. Nice to see some familiar names. Fantastic, it's wonderful. Guys, just before I begin, look, if you have any setups or anything you're looking at over the pre-event or anything like that, please do put them place your setups in the chat box, and we'll hopefully get enough time at the end to have a look over the charts, some of your setups. All right, guys. So look, good afternoon. Look, traders and investors, welcome to our latest NFP event. Thanks for tuning in. I hope we're all doing well this Friday and have had a positive trading week. And quite a week it has been. So look, now, as you can see with the disclaimer on the slide, just to reaffirm that I am not able to provide direct investment advice. This is more of an indication of what price action may do during the event or post-event. So with that being said, just bear with me. So with that being said, I'm going to switch over to the Reuters Economic Monitor. Look, before I continue, as I said at the beginning, please feel free to post your setups in the chat box of, excuse me, for any markets you are watching, and we can look at those once the event is done and dusted. So as I've said, it's been quite an interesting week, right? So the US dollar continues to flex its financial muscle, reaching highs not seen since mid 2002. And of course, this has weighed on major currencies, in particular Europe's single currency, which controls the majority of the weighting within the US dollar index, or the DXY. Euro dollar is currently down an eye-watering 3%, I believe, 3%, and the pound dollar is also down heavy as well on the week. Now, just to be clear, the pound is another component of the US dollar index, but unlike the euro, it contains around 12%. So dollar health is largely, as I'm seeing things, dollar health is largely fueled on the back of safe haven flows, as global recession clearly looms for many. Energy concerns as well are a big thing in Europe, of course, and that's certainly pressuring the euro lower. And look, I'm sure most of us are aware by now, the UK PM Boris Johnson's inevitable resignation hit the wires in recent events. And overall, though, the pound actually seemed to have rallied on the back of this. But given the trading, given current trading, we are now down by, I think it's 0.6%. And so we've essentially wiped out those gains. And as the UK now looks forward to a government entrenched in an era of uncertainty. Now, of course, the main highlight for today is the non-farm payrolls release that's due in, just a little more than 10 minutes time. According to the forecast from Bloomberg, this is the Reuters terminal, and we don't actually get the Reuters polls with the terminal here. So I've had to take the forecast from Bloomberg. So the median estimate is currently for the non-farm payrolls for June is currently sitting at 268,000, the median estimate. Now, the average is 263,000. Now, the survey high and survey low is between 400,000 and 90,000. The prior release, as you can see here, of course, was 390,000. So although the upcoming payrolls is looking to show a lower than expected value, I would really think that a surprise miss would be needed. A surprise miss would be needed to have any real effect on the current course of the Fed's projected rate increases, which itself may also see the dollar index consolidate around the recently refreshed 24-month highs. Now, according to the CME Group's FedWatch tool, I'm just pulling that up as I speak. We are sitting, and look, this is available for everyone, available to all for free, and is basically based on the Fed funds futures contract prices. And look, this currently has a target rate probability of for the 27th of July meeting, set at a 94% probability for another 75 basis point hike, which of course would bring the Fed funds target rate to 2.25%. Between the Fed funds target rate to between 2.25% and 2.5%. Look, a healthy US inflation release on Wednesday should really reinforce this 75 basis point forecast. Now, as I said, I really think we need to see something drastic occur today with the release to have any real effect on the Fed's current path. As annual inflation, as I'm sure most are aware, in the US currently stands at 8.6%. Now, in the UK, I think it's 9.1%. So we are at some incredibly high levels at the moment. And the latest FOMC minutes essentially on Wednesday essentially echoed the need to combat spiral inflation with policymakers really prepared to hike rates to levels deemed restrictive for the economy. So for the unemployment rate, this is here, and again, this will be released at the same time as the non-farm payrolls. So the US unemployment rate, again, at 1:30 p.m. British time. Now, the median estimate for the unemployment rate currently sits at 3.6%. So we're expecting a no change according to the economists' forecasts. We had the average, again, is 3.6%, but we do have a high and low range between 3.7% and 3.5%. Now, I also will be watching the US average hourly earnings. As you can see, the prior forecast came in at 0.3%. 0.3%. So the median estimate from Bloomberg again is 0.3% with an average of 0.3% and a high and low survey between 0.4% and 0.2%. Now, I don't see anyone in the chat box highlighting any setup, so I assume we're all pretty much flat going into the event. I am going to switch across to the MetaTrader platform. I do hope you guys can see this. I'm just going to ensure you can see this, so I should reshare again. Bear with me. Okay, so look, what I'm watching going into the event is I have the dollar CAD, pound dollar, and dollar Swiss in sight for short-term opportunities. Now, I'm going to kick off with the dollar CAD, primarily because we are engaging. Well, we have been engaging with this considerably large big figure, right? This big figure, psychological figure 1.3. Yes, as you can see, we have popped lower and we've made fresh lows, but I do anticipate a potential whipsaw off this level and to hit this prime resistance. Now, this prime resistance, now guys, this is the M5. So this is a very, very short-term area. So as you just want to pull up the levels so we can all see where we are. The parameters are 1.3011, just say 1.3011 to 30.005. Just say between those two ranges is where the prime resistance is. So it'd be really nice to see a pop above this round number, take out all of those buy stops, take out anyone that's interested in buying the short-term breakout above that round number, and test this area for a potential move lower. So look, for any harmonic traders watching as well, we do have a potential clear, the drawing tools on MT4 are pretty substandard, so I'm going to try my best. But we have a B, and we have a CD. So from this point to this point, if I switch over to the Fibonacci tools, just bear with me, guys. I'm going to use the Fibonacci expansion here. I believe we'll have a 1.272% Fibonacci expansion at that level, and we do right there. So that forms within the level. So for anyone that does follow harmonics, we'll note that that's also an alternate AB equals CD formation. So if we do pop above there, I am expecting a nice reaction to form from this area. If we do clip above this area, then I will be looking for a return back to break even to allow us to exit the position. So do keep an eye on the dollar CAD for now. Now, the pound dollar has just recently popped higher. I did mark these levels prior to this pop higher when price was around this area, because I thought this supply here, again, M5 guys, very short term. I was looking for a potential pop down to this area, but I really don't see us getting that right now. In terms of dollar Swiss, now this is a H1 setup. So the H1 area I'm really interested in is the is between 97.25 and 97, the figure. So between this area, we have seen a pop higher. I do expect a retest of this area should we have a dollar push to the downside, and we could see a nice reaction form from here. So I am watching this area, largely this area on the dollar Swiss and also the dollar CAD if we do see a pop higher. Now, how long have we got? Let me just keep an eye on the calendar. Look, we've seen the countdown coming, starting now. So we still have 3 minutes and 50 seconds. So guys, please do get your any setups you have in the chat box, and we can discuss them following the event. So I will go into my also the, bear with me guys, I'm trying to find the charts. Okay, so I will also go into the longer term view, right? So euro dollar longer term, it's incredibly bearish right now. So I will go over this at the end, but euro dollar, I'm incredibly bearish right now. Aussie dollar, I'm also bearish, despite us touching support. I will go over that again. This is the weekly time frame, guys. So is this on the euro dollar weekly time frame. Here we are touching support, and we have seen some buying interest come in from here. All right, we have a comment here. I have a pound yen running long. All right, I'm just going to pull that up really quickly, guys. Can you give me the basis for your setup, please? Just bear with me. Let me throw up a new chart. I don't want to miss the event, so I'm having to be careful here. Pound yen, and also the time frame would be good, please. All right, so we're on the pound yen. This is the monthly time frame. I'm going to assume maybe an hour or something. So if you have a pound yen running long, you're likely sitting in a comfortable space right now. So let me just check the calendar. All right, guys, we have 2 minutes to go. So if you can fire over your entry level, that would be cool. Or why you decided to enter. Entry 162.195. Fantastic. Thank you. 162.195. So did you back? Oh, 15 minute. Okay, 15 minute. Okay. Well, you're sitting very nicely heading into the event. Have you reduced risk to break even yet, or where did you place your stop? Was it below these lows at this point, or so your basis for entry? I guess was this resistance turned support, or am I completely out there? There was also a nice, I think. No, that wasn't. Oh, it just missed it. It was nearly an AB. Break even now. Oh, okay, excellent. All right. So look, guys, we are heading into the event now. All right, we're less than a minute now, so I'm going to stay on the calendar right now. And look, we can talk about your setup after this if you wish. What's your profit objective? Just really quickly, what are you looking at to get from? Are you looking at these highs up here? All right, 39 seconds, guys. 39 seconds. Here we go. So remember, just a quick reminder, guys. Median for the non-farm payrolls is 268K. If we get a much lower than expected number here, this could mean some serious moves in the market. Also, the unemployment rate, 3.6% we're expecting, and again 0.3% expected on the average hourly earnings. 10 seconds, guys. 5, 4, 3, 2, 1. Here we go. Okay, so good number for the non-farm payrolls, 372K, as you can see. For the unemployment rate, as expected, 3.6%. For the average hourly earnings month on month, as expected, 0.3%. Slightly lower for the average hour earnings for the year on year, 5.1%. Look, pretty good, overall, pretty good reports. So I'm back onto the charts. I want to check out those charts. Just really, whoa! Did not expect that. This is why you should probably avoid trading during the events if you're not if you're trying to trade technically. That was some move. That was, look at that, 43 pips in a matter of seconds. Look at that for a candle. All right, let me check where I am on the pound. Oh, the pound is powering lower right now. So we could actually test that area as I highlighted. Let me see where we are on the the dollar CAD. So the dollar's higher. So the dollar's reacted positively to this. So let me just quickly pop over to the dollar index. Yeah, the dollar index is higher. Look. Let me just go down to a lower time frame on the dollar index. Yeah, look at that, the dollar index. So the dollar's higher against its major peers, guys. This is a strong dollar move for the. Let me just check out the news. Oh, sorry, not this one. It's the news. Let me bring this across so we can all see. Bear with me, guys. I'll bring this across onto the main screen. So here we go. Here's US 10-year Treasury yields jumped to 3.5% after jobs data. This is a Reuters terminal, guys. So you fill your boots. We can have a nice read here. All of the details are coming through here. So it's a pretty dollar positive move. Let me just check the charts. I just want to see where we are on that pound. All right, so we're coming lower. I'm going to keep an eye on this setup, actually. This is a solid downside move on the pound. Now, this should really not surprise, to be honest, when we're on, especially considering the higher time frames. Oh, you're out. Oh, yeah. Okay. So the attendee that was talking about the dollar yen, did you exit before the event? Because that would have been a touch painful. Oh no, it's not too bad, really. I mean, it's pulled back. The pound, yeah, the pound has pulled back from its initial. All right, we've got another attendee saying about the Aussie dollar. So I'm looking at the Aussie dollar. Aussie dollar should hit 6,900. The Aussie dollar's gone the other way. Lows at 6,800. Yeah, so look, we are now testing the 68 level on the Aussie dollar. But look, for the euro dollar, look, we are lower. Longer term, we are lower. Weekly time frame trend is clearly lower, guys, and we've taken out this, this enormous support on the weekly time frame, made up of a number of technical levels, and we have room to move lower on the weekly time frame. Look at that, the 1.272%. Well done, by the way. Yes, before I would have probably got out before as well, to be quite fair. But look, the 1.272% on the weekly time frame at 99.9925 is the next downside target for me long term. On top of that, guys, we also have the euro dollar on the daily time frame now testing resistance at 0.182. So we do have room to move lower. Look, every man and his dog is eyeing parity on the euro dollar, right? Parity is the 1.0000 level. As you can see, we are now below resistance. We have room to move lower, both on the weekly and on the daily time frame, to reach beyond parity, according to the technical studies that I have. So I am looking at the 99.25 level on the weekly and the 99.19 level on the daily. Now, for the Aussie dollar, we did have an attendee speak about the Aussie dollar. Look, I'm very bearish on the Aussie dollar, as I said at the beginning, despite this support on the weekly time frame. Now, this support is made up of a 100% Fibonacci projection at 66.32, a 50% Fibonacci. Sorry about this. My mouse is just frozen. There we go. So yeah, we have support between there and a support level at 66.73. Guys, if you have any other setups you're watching, we've had some quite hefty moves on the short term for the short term. So if you have any setups you're looking at, look at that bounce from the 68 level. Very nice. Oh dear, the dollar, yeah, the pound yen has rallied. So I'm going to look back on the charts here. Where was we looking at for? Look at that. What a move. What a move. That is incredible. That has just killed some stop losses above this area. Look at this. Can you imagine the amount of stops that were above this resistance here? It's just incredible, that move that would have taken out a truckload of stops. Dollar Swiss. See, look, the dollar Swiss could still play out at this area, but you know, as we usually see after the event, it usually quietens down, especially like 20 to 25 minutes after the event. So let me just check the news once more. See if we had anything. Nope, nothing going on there. Okay, guys. So I don't really have anything else. Oh, other than the dollar yen. Look, I wanted to talk about the dollar yen. So dollar yen longer term is still higher, right? We are hitting this resistance at 137.23, 136.04. This is the weekly resistance, guys. But I do not see a lot stopping the dollar yen, especially based on the rate differentials at the moment. So the Fed is just on a trajectory to increase rates, and the BOJ has stuck with its dovish policy for now. So, and in terms of that, we also see the daily time frame looking higher at quasi-monthly support term resistance at, it was there, 139.55. Finally, on the pound, we are now testing the 122 level, 120 level. Now, this is a key level, guys, for any market. This is a widely watched level. Now, if we hold below here, this does not bode well for the longer term, because look, if you look at the longer term, I have been watching the 1958 Quasimodo support on the weekly time frame for a number of weeks now. If we do pop below here, then I am looking at pandemic lows, guys. I do not see anything stopping the pound from dropping to 14.10-ish if we do pop below this support at this area. Now, do keep an eye on this trend line resistance on the daily time frame. This is a key area, guys. The pound dollar is really reactive to trend line resistance, correct trend line resistances, guys. And they're really reactive to these to trend line resistance. So if we get a pop higher, I do expect sellers to attempt to come in from this area. Just a quick look at the overall longer term dollar play at the moment. Now I will remove that. So I did note in my last weekly market briefing that I did think the dollar might turn around from here, but how wrong I was. We are still within prime resistance. This is the monthly time frame, guys, between 109.77, 104.96. Look at this. We have a consolidation and a pennant, really. So it's up to you which one you want to choose. But I mean, I really like this pennant here. It's not the greatest, of course, but it is a pennant nevertheless. And we have broken out to the upside. And for any technicians here, they will note that the pennant is generally a continuation signal. And we have broken out to the upside and retested the level as support. And we are looking like we are going to engulf this prime resistance. Now, if we do, we could be heading for highs of like the 116, between the 120, 116 area on the dollar index. This is a long-term play, though. But look, we do have bearish divergence, early bearish divergence, I must add, on the RSI. So let me just check that dollar yen chart. Price has reacted well to that. Now let me see where we are on. Just trying to see. No, there's nothing going on now. Right, guys, is there anything else? Is there any other chart setups you have or anything like that? Any other charts you want to look at before I You're more than welcome, Nizar. Thank you. So that was a great trade, by the way, on the dollar yen. Well done. Fantastic trade. Fantastic way to end the week, right? All right, guys. So I'll leave you in peace, and I'll see you. I'll catch you next month for the NFP. So thank you very much for joining. Have a wonderful weekend, and we'll, as I said, we'll catch up again soon. Thank you so much, guys. Goodbye.